Welcome back, everybody, to episode 26 of the Backholder Pod. So, as always, remember to help gently click that cute little like button so that it gives us more motivation to continue on. So, I think in this week's topic, just recently, one of the biggest movers of the market is actually Alibaba. So, for those of you who don't know, Alibaba is actually my biggest position. All else said, I think based on the different news coverage and the discussions around how they're going to split out their business units and it's going to be a net positive for shareholders. Let's not forget that from its highs, Alibaba was trading at $300 over. So even with this recent 10-15% rally, it's still at it's still down 66%. So yeah, I think before I just continue ranting on, maybe I'll just open the discussion to the floor, and maybe any of you have any questions or wait, I don't think any of you have an Alibaba position, right? I'm the only one here, right? I think Bunti sold out quite some time ago. And I think Eric and Kelvin is just totally not interested in China. So I think that's that. Right. So yeah, open to the floor of discussion. Anyone has any opinions on this? And do you think it's basically speculation, or do you think it's going to be sustainable?
Actually, Chicken, what has changed? Can you please don't treat all of us like very well versed with what's happening with Alibaba? Just treat it like we don't know about this news. What has changed? What is different this week compared to last week?
In theory, nothing changed, but I think in practical sense, there are probably implications like second and third order impact. So generally, what happened is Alibaba is a great conglomerate, like most of your other group big tech out there. So maybe your Amazon, your Google, they have many different business segments. Like for Amazon's case, I like to draw comparisons with Amazon because they have fairly similar complexity. So if you're advertising, you have your commerce, you have your cloud and stuff like that. So what they came out to say was that Alibaba has intentions of breaking up the main business into 6 different parts. So off the top of my head, there's cloud, there's e-commerce, there is international commerce, there's Cainiao, there's local services, and then there's digital media. So what they're essentially doing is by breaking it up, they're allowing for individual companies to have essentially scrutiny where they have their own bosses, they have their own priorities, and they are basically trying to dissipate any form of bureaucracy and stuff to make the different business units more agile. And from that perspective, maybe they can raise funding in future and maybe tap into public markets as well. So I think that's just the general gist of it. So, but in theory, has anything really changed? Technically, no. But from an investor's perspective, because of this splitting up, it might make the market more efficient in terms of pricing the valuation of the company, because they're able to more effectively price it rather than try to group everything together and price it together as an enterprise. I think that's just generally my thoughts around this breaking up. And I would think that nothing changed, but I guess the market seemed to think otherwise.
At least the share price has changed. Okay, next question from...
The share price doesn't matter, but yes, next question.
Actually, I'm curious, what made them to have this decision to break up? What's the push factor?
That's a good question. I think as of now, there's a lot of speculations on the side. So there's a few big school of thoughts. One is probably they say that, the Chinese government essentially forced them to break it up. It's essentially like dismantling of big tech. So at least in the US big tech space, there are many things that are floating around saying that maybe they want to break up Google, want to break up Amazon. But the US regulators or the US government agencies or officials is probably a lot slower compared to China. So that's one school of thought. The second school of thought is really to unlock shareholders' value. So I think I maybe wanted to circle back into understanding why it unlocks shareholder value. So for one thing, whenever that in finance world, there are a few ways you do valuations around companies. So one of the most standard one is like DCF. So DCF is discounted cash flow, right? You try to predict out the future incremental cash flow to shareholders and then you discount it backwards. But then another way is called sum of the parts. So how people usually do sum of the parts is they break up the businesses and then they individually value them and then they bring it together and then they apply a discount rate. So why do they apply a discount rate? Probably because of friction, lack of priorities and stuff like that. But then when you allow them to essentially break up the businesses, you allow the market to price them more effectively. And a very easy example is, for example, let's say I have an ETF. I'm running an ETF. I want cloud exposure. So I want China cloud exposure. So your big China cloud players are like Baidu, Alibaba, Tencent. So if I want China cloud, I have to buy them. But the problem is I only want Ali Cloud or I only want Tencent Cloud. I don't want e-commerce business, the gaming business. So then there is this sort of market pricing inefficiency because maybe some people want to allocate more money to cloud, but they don't want the whole business. So they tend to allocate lesser. So with this breaking up, it effectively allows people to move capital easily and it can price more, I would air quotes it, more effectively in this case, which is why they say it kind of unlocks shareholder value because the market can do their own thing and let demand and supply work it out. So I think that's generally my thought process on the whole piece. But I think I've been ranting on a lot. But yeah, if there's any more questions or if the viewers are interested or if you guys from a perspective of an outsider, do feel free to shoot any more questions.
In the case where it really breaks up into 6 different parts, right? Like, is it all still going to be under a parent company? Like, even though they are listed like separately, are they still going to be under this conglomerate? Like, just everything is still controlled by a holding company, that kind of thing.
Right. I think so. Here comes the nuance. There is not much details that went into the idea of how it's going to break up. And I think one thing I wanted to note here as well, there's an intention of breaking it up into 6 business units. Doesn't mean all needs to go IPO and all needs to raise capital. So to give you an example, I think for the digital media arm, right, which is a profit losing, there is no, I don't really see a utility in that particular business unit. I usually just write it off. But let's say if it's going to go IPO, I don't see a point in it going IPO. So that's just a distinction. Then the second part on equity ownership, what's going to be the arrangement like? I think it really depends. But I think China has been a very innovative player in the space by coming up very interesting structure on how they're going to do this kind of financing. And side note, for those of you who don't know, for all your shareholding that you own, like currently quote unquote own in China, it's under a VIE structure. So for those of you who don't know, please go and do some Googling. I'm not going to spend too much time to explain here, but you kind of own the share, but you don't really own the share as well. Hey guys, do you know what's a good broker to buy stocks?
Oh, I know, you can use Moomoo.
Why?
Moomoo got low commission, so you save a lot on trading fees.
Not only that, they also let you easily keep track of the company's news and announcements.
Oh yeah, they also let you easily analyze companies from both the technicals and fundamentals to help you make better decisions when investing in company.
Wow, so good. But they got give sign-up rewards or not? Or any sign-up fees or not?
Got. For the first reward, when you deposit $100, you get $2 cashback daily for 10 days.
And for the second reward, deposit $2K and perform 2 buy trades to get a free Coca-Cola stock worth $80.
And the ultimate reward, deposit $10K and perform 7 buy trades to get a $108 cash coupon.
Wow, so good. So if you're interested, you can always sign up with the link below. And as always, thank you, Moomoo, for sponsoring this video. So I think I just want to put a caveat out there. In terms of how it's gonna play out, what kind of financing, who owns the majority stake, I would presume that Alibaba as a group, under the big umbrella, most of them will still, like the main company will hold the majority position. But I wouldn't rule out the fact that, hey, maybe next time if CCP thinks that cloud is a very important business, somebody wants to assume a bigger portion, or even like Ant Group. So Ant Group, Alibaba currently only owns like 1/3. So I wouldn't jump to the conclusion saying that Alibaba will maintain full control over all the different business units. But at least for now, logically speaking, they would still hold a majority stake in most of the business units. And if they want to go IPO or if they want to do a public equity financing, then they can sell out or they can kind of raise funds, whatever kind of structure that they have. But I don't think there is a very concrete plan yet. And by the way, the recording of this video is 29th. So on the 30th, which is tomorrow, they're going to hold a meeting. Like Daniel will hold a meeting to talk to shareholders about it.
I look at the share price, right? It went up like more than 10% on the day the announcement was made.
Yeah.
So I find it quite interesting because if you just tell me like, okay, they're going to announce the breakup of Alibaba and ask me to guess the direction, whether it's up or down, I might say yes, but I would say, let's say 60% probability kind, I don't know like how the market will react, but apparently market reacted very positively. So I think that there are 1 or 2 different theories to explain why the share price went up so much. One is that before the breakout, essentially this is what we call the conglomerate discount, meaning that one big business, one holding company, they own many businesses. If they break up, they can unlock value. And second theory is to say that, okay, now all these smaller companies, say for example, like Cainiao, instead of just serving their parent company, which is Alibaba e-commerce, now they can serve even JD or Pinduoduo, right? So there's more opportunity there. But if you think about it, doesn't make sense there, because if you talk about like breaking up, but the biggest one, which is Taobao and Tianmao, is still under Alibaba. So there isn't much like so-called breaking up. Breakout, you have to break sort of like evenly, then you call it breakout, right? This one is not. This one is like you just throw up the small part and you call it breakout, right? So I think it doesn't make a lot of sense there. What do you think about this?
I think actually there are two core parts lah. The other one is the cloud part. I think people there are a lot of like chatters around the cloud business in China. I mean all three of them, the three big ones lah, Tencent, Alibaba, and Baidu. All three have been slowing down quite significantly. But of course there are many theses around it being bullish lah. So I was thinking by this breaking up, right? I do agree like Taobao, Tmall, Tianmao and Taobao is gonna be the profit making one, which is why I was also thinking, if now let's say you're gonna list Cainiao or you're gonna list local services, which are all still negative cash flow and whatever, right? I think they just recently break even or something. Who's gonna buy the shares? I don't know who's gonna pump the shares, but it doesn't really make sense from a perspective of a shareholder. And because essentially majority of the value of the share today is in a cash position because they hold a huge ton of cash on their balance sheet, and also the profitable segment, which is the Taobao and Tmall. So cloud can be a kind of like a Trojan or a dark horse where maybe it might come out very profitable, it might not. Who knows? We'll see how it goes. So then the breaking up really it relies on these two business pillars or these two business segments. So I think I feel like that 14%, 15% jump, right? There is a large part is because there's a lot of volatility around China stocks. So people like to trade around news. I mean, you can see the stock price, right? It just keeps going. It trades between a very large band, 80 to 120, I think. It just keeps going up and down, up and down. I think this is like the second or third time we are going up again. The one is on volatility. And number two is I think it's more of a signaling effect, where they're saying that, maybe China is finally opening up or there is some shift in sentiments and stuff like that. So that was kind of how I look at the whole situation. But like I said, when I circle back again, theoretically and fundamentally speaking, the business is probably still the same. You can argue that by having more priorities of individual CEOs looking into the business itself, it might provide more value. But I think it's we need time. We need like a few quarters to see whether there's any business improvements or not. So I'll just leave my comments on whether it fundamentally impacted or not to myself first. We'll see how it goes. The numbers don't lie.
I want to ask like Kelvin or Eric, right? Do you guys buy all this so-called narrative coming out that support the share price up? Do you agree with that, or actually you have different thoughts?
Actually, I think that if you need to spin off something, right? The article that I'm reading from CNA says that there will be 5 IPOs, but the 2 core revenue drivers, which are Taobao and Tmall, right? They basically will stay with the Alibaba. So if you're spinning out all these so-called small fries, right? I don't know how excited the market will be. Is because you all know that for Tesla, right? They also don't like spin out all their subsidiary businesses, even though they have a lot of businesses in-house, because they don't have that kind of revenue to justify an IPO. So I'm a little bit skeptical. I mean, this is like, I think this is what Chiking is saying, like the market is trading around some kind of news. Like anything, they just feel that, it's bullish, then, let's buy it up. But I think probably give it like 2 more weeks, then everything die down again. No news, then it sell back down again. That's what I guess will happen, because yeah, if like what you are saying, like those are the small fries you go and spin off, like, so what? It's like nothing much, yeah.
I think the business isn't small. For example, like Alibaba Cloud, right? In terms of market share, they are the largest. So definitely not a small business. It's just that when it comes to profitability, they are not profitable. So for Alibaba, only the core e-commerce that's profitable one.
Yeah.
The rest small one, right? They are like close to break even, depending on which metrics that you look at. So not small business. It's just that how much value do you assign? One more question I want to ask also is like, when we talk about the IPO, separately IPO, that is same as selling out the companies. For example, like Alibaba Cloud, you currently, the holding company own 100%. You do an IPO, you have to sell the shares to someone else, right? Is it like good given that you don't even know what's the price the investor will buy in, right? So if they have to sell out at a price that is not attractive, what's the win for the Alibaba shareholder? If the share price is low, I would think that it's better to, do share buyback or instead of like selling out all this, unless they can say that, okay, the price they can get is much better, which I doubt so lah. So that's the doubt that I have. Viewpoint this.
For me, my understanding of Alibaba is always like their e-commerce is carrying the entire company. Then now you are trying to break it out. Okay, so when I check, the cloud business is like slowing down. The others are not really giving any kind of revenue. So the biggest revenue stream is definitely from the e-commerce business lah. But the e-commerce business is facing what is that called? Competition from TikTok and other places. So that's the whole reason why Alibaba went down in the first place. So now when you have all the dark horse removed from Alibaba, right? Their catalyst sort of isn't there anymore. And the catalysts now are thrown out all to survive by themselves. So to me, it feels like a negative thing that Alibaba is breaking out because they are leaving the e-commerce thing that's going on by itself, cloud that's going on by itself, then no one is carrying anyone. So it feels like a bad thing for Alibaba.
Let me give you an analogy. It's like let's say like a rich man, right? He has 6 children. So let's say the eldest one is a successful one. Okay, we take our own ownership of the family business. Then got 5 siblings which are useless one. Now the family just want to disown five of them. So I think that's how it works. Others not profitable.
I would disagree though. I think the 5 is not I think the 5 is more younger. They are of a tender age. So I think in terms of growth rate wise, they're still in the 20s, 30s range. Just for info like for local services, for Cai Niao, they're still, I mean, you would probably consider them as growth companies, but they're not really growth like Tesla kind of 50% growth, but they still consider the 20-30% kind of growth rate. And then I think cloud is the one that everybody is looking forward to because I think if you spin out the cloud business, if you add up e-commerce and cloud only, like in the holding company, where currently I think they were trading at $80 range. So if let's say you spin out both e-commerce and cloud, I think both of them accretive value add up would probably be more than $80. Like if you allow market to price them effectively. So which is probably why they kind of short-term bidded up the price by such a large extent. Because we all know that it's worth more. But it's just that nobody wants to touch it because like China, blah, blah, blah. You add in all the narrative thing, right? Then nobody wants to touch the business. But then if they can effectively push both company or both subsidiaries or throw it out into individual listings, right? I don't know, based on my own very conservative estimates, it's still it's around or even more than that value. Assuming that I net out the cash on the balance sheet. So that's why that's the 2 business arms.
That's why I think too. Their cloud is their real growth story right now. Just so happened that Jack Ma suddenly reappeared in China, and he was talking about the AI thing. The AI thing is related to the cloud. So I don't know. This breakout seems. I'm still on the side of that. This breakout is bad for Alibaba. On the cloud side, it might be a better bet right now. It could give a higher return just because this whole AI thing is taking off soon. And also, I think Alibaba is working on some ChatGPT clone.
Everybody is working on that.
Maybe I asked the child, the illegitimate child question. Remember there was this child that was disowned by the ancestor of the family. Like the other time they wanted to IPO this N Financial, right? Like I think, was it 2 years ago? Yeah, that was I think the catalyst that sparked off the whole slide, right? All the way from 300 over to like less than $60. So I don't know, like isn't N like the biggest piece of Alibaba? Like much more profitable than the cloud part?
Yeah, as in much more profitable because N is it's older than an Ali Cloud, and it's probably quite matured as well, considering the fact that they penetrated like most of the market already. So they're just basically coming up new stuff or new services to kind of just bump up their revenue. But from back to the question on this illegitimate child. So what the current arrangement is that Alibaba Group still holds 33% of the company of N Group. And I don't know when the IPO is going to come, but it does seem like they're going to still push for IPO, but not at this current valuation climate, because I think you IPO anything will just become rubbish lah, because there is not a lot of excitement around the business itself. But back to that, you don't really see Ant Group as a standalone company because they said 6 business segments lah. Because Ant itself is how they report their earnings is they straight away feed into the bottom line of Alibaba. So like let's say Ant Group will earn X amount of profits, let's say $100 million. So 33% will be accretive to Alibaba. So they'll just pump the 33 million back to Alibaba's financial statement. And then they just report it as a net income or net loss. But it has been net income for the last 3-4 years that I've been starting the company. So yeah, they haven't been making losing money lah. So that's why Ant Group isn't necessarily in one of the business segments of Alibaba when they report their earnings. So back to the IPO thing, it's touted as one of the largest IPO that time at a market peak. I think it commanded around $300 billion valuation as a new company. But it was kind of established on very shaky grounds lah. They were essentially creating, I mean, from just to kind of speak from the Chinese government's perspective, they were creating a systemic risk. They were lending out a great deal amount of money with a very shady system where it's proprietary in nature, and then they allow for people to borrow money and stuff like that. There was a whole host of different problems and issues that came out. But it was kind of swept under the rug because of technology or disruptive technology. So then the government came in, they disrupted the whole thing, and then now they want them to be more capitalized. They want to regulate them more like a bank. So long story short, that's what happened. So I think from 300 billion, I think now private estimates are around closer to $100 billion. So there is still, if Alibaba owns 30%, that means that they still own a $30 odd billion stake in Ant Group, if you believe in their private valuation. So that's just...
So the 70% owned by who?
It's a very complicated structure. So like I said, China is a very interesting place. You can do a quick Google search. I think Financial Times has a breakdown of that. I can include a screenshot here for whoever that's editing later.
Oh, okay.
Yeah.
Are you going to buy the rest of the companies that split up?
I don't need to buy what? They will split it out and give it to me, right? No lah. I mean, they will split it to me, right? If I'm not wrong. If they're gonna spin it out.
But if you are going to DCA, which are you going to DCA? Is it equally?
Probably not. I'm gonna DCA in the profitable ones and the ones that I think got potential. I always write off 2 businesses that I don't really like. I don't like the digital media business. I don't like the local services, because I don't think they can win Meituan. I mean, I also have Meituan shares, but it's free lah from Tencent. But I still think that Meituan is a lot superior, judging from their financial statements compared to Alibaba. So Ali feels like they're just creating an ecosystem for the sake of it. Like they are not really putting in a lot of effort. So which is why when you introduce a CEO in, maybe he's more accountable. I don't know, but yeah, I personally don't really like those 2 businesses. And international commerce has been a disappointment lah, especially for Lazada. But we'll see how the new person comes in.
So in short, you're going to long the profitable ones and short the unprofitable ones.
I won't short the unprofitable ones. But cloud is not profitable also. But I will still long cloud if I can lah, or if I want more exposure in cloud.
Why is the cloud not profitable? I thought cloud was like very, very profitable.
I think they're still in the, at least from my understanding, right? So Alibaba is the only one that breaks down their revenue by cloud. So even Tencent and Baidu, they obscure it into some random stuff that you can't see the breakdown. So at least for now, I think they are EBITDA break even. So after become earnings ready, like if you net everything out, then you're not profitable already. So why it's that so? I think in terms of the scalability wise, they kind of haven't hit that inflection point, I guess. I think now they're doing around 8 to 9 billion USD. I forgot is it USD or it should be USD, 8 to 9 billion. So they are the biggest in China, but when you compare it together with the US counterparts, even Google is bigger than them, but Google, I don't think they are profitable yet too. So then I guess they haven't really found the formula to solve this issue. But yes, they need to continue scaling up. I think the scale part is the more important factor now, especially when it's a nascent market and China is a green market, meaning your US companies are not going to get Chinese businesses. So they have to go out and snatch everything first before Tencent or Baidu comes up with something better. So yeah, I guess that's the logic. Okay, so maybe I'll just round it up with some very quick thoughts. I think generally, like I shared in one of my latest video, right? I said don't really focus too much on this noise because there is a lot of developments around this whole Chinese space. I don't know why, but it's just stocks that are very good for trading. A lot of traders are around this space, so they always like to play in and out of the stock. So I think even NIPO, it came out like people familiar with the matter like 2 or 3 times, and then the stock price in the pre-market will shoot like 5, 8, 10%, and then it comes down again because it's fake news. So then this entire IPO thing, yes, it's already recognized by the company, so it's real news. But the issue is now, what's the real impact on the business itself? We don't know. It takes time to tell. So then for legitimate investors that really think that it's a good company, it's probably going to generate enough cash flow, valuations are decently cheap. I mean, it's okay to want to kind of buy into it, but don't need to FOMO and, this is my last chance to get it under $100. I think that's a little bit too stretch. Kind of monitor the business and just focus on the profitability and the how the business develop, rather than all these funny things on the side that comes in and out occasionally. So yeah, hope you guys enjoyed the Alibaba discussion. Any questions, leave in the comment section down below. More interested in Alibaba can follow me on my own YouTube channel as well. So yeah, with that, see you in the next video. More importantly, I hope it finally, like our background, finally we will rock it up. Yeah, so we'll see you in the next video. Goodbye.